Good morning. I would say that I'm pleased to see you, but I can't see you. So I'm pleased to welcome you to our webinar. My name is Ruth Shapiro, and I'm the co-founder and CEO of the Center for Asian Philanthropy and Society, which is not to be confused with the Center for the Advancement of Philanthropy, which is also well represented here today. I have with me here in Hong Kong our Director of Research, Annelotte Walsh, and our panelists today, Pushpa Singh, Nashir Dajrawala, and Poonam Choksi, who I will introduce more just in a better way in just a minute. Let me just say that we're here to hear about the Doing Good Index. The purpose of the Doing Good Index is to really understand the factors which enable or impede the giving and receiving of all types of private social investment, philanthropy, CSR, impact investing, and also what helps to contribute to the health and well-being of the social sector, including nonprofits and social enterprises. We at CAPS are fond of using a term social delivery organization, which explains the work of most of you on this call, because some organizations are no longer nonprofit. They have a for-profit funding stream, or they are social enterprises. And in some Asian economies, NGO doesn't quite work because many are GOs, or government-linked organizations. So we use the term social delivery organization to take care of that. I want to say that our work on the Doing Good Index has historically been in 18 economies, 16 countries, plus Hong Kong and Taiwan. This past year, 2022, we could not do a full engagement with Myanmar for unfortunately obvious reasons. So they're included a little bit, but we weren't able to survey them. We could not do this work without our partners, and our partners in India to carry out the Doing Good Index are GuideStar, run by Pushpa, and the Center for Advancement of Philanthropy, run by Nashir Dajrawala. Let me just tell you what CAPS is, and then I'll introduce our speakers. The Center for Asian Philanthropy and Society is really about what works on the ground in Asia. How can we increase both the quantity and the quality of private resources going toward doing good? How can we engage across sectors? How can we get philanthropists to do the needful and fund to their maximum potential? And how can we help social delivery organizations be fully engaged and representative forces for good in each of the Asian economies in which we work? Asia is on the rise, and there's been, this term, this is the Asian century, for a while. And yet it's not quite the Asian century. The United States is still the hegemonic power in the world. But we're reaching that tipping point. We're reaching that pivotal moment. India, as you all know, is now the most populous country in the world. And the world is expecting great things from you and by you. And we are part of the world. We see great things from you, by you, and when we visit, are amazed at the breadth and depth of social innovation that takes place in India. So this is just one view on how to maximize the sector. We do all of our reports at the end. There'll be information about CAPS. Our website is www.caps.org. I encourage you all to look at our website. All of our reports are free to look at, to download, to comment, to send to your friends, whatever you want to do with them. Let me say what's going to happen today. Annelotte and I are going to present the findings from the Doing Good Index, and then our three panelists, Nashir, Pushpa, and Poonam, are going to share their views on the social sector in India. Let me tell you a little bit about who they are. Pushpa Singh is an indefatigable force for good in India. She has incredible strength, stamina, goodwill, and I think is just forging ahead at really trying to help elevate the sector and maximize the work of social delivery organizations across the country. Pushpa she was the founder of GuideStar India. The force behind it continues to be, has a long and storied background in working in the social sector throughout the region, and works with government on a regular basis because her opinion and her expertise is so valued by so many players in India and around the world. Nashir Dajewala is certainly mine, and I think I speak on behalf of many of you, our guru when it comes to understanding the laws and regulations and intricacies of what is happening in India. And like any good guru, he takes very complex ideas and makes them palatable, bite-sized, so that we can understand them, because it's very hard to follow what's going on in the regulatory and legal space regarding our sector. So thankfully, we have such an able guru as Nashir to guide us. He has been involved in our sector for 35 years, which clearly means that he must have started work when he was 5 years old. And is also sought after mentor and provider of wisdom and thoughts, not only in India, but to organizations around the world. Poonam Choksi is the able lieutenant of Amit Chandra at the ATE Chandra Foundation. She is really involved in helping the ATE Chandra Foundation build its capacity, focus on human resources, which is an area that we focus on in the Doing Good Index, and we'll talk about today. And she will talk about in her comments and remarks, I imagine. Those are our speakers, but let us not forget the most important people on this call, and those are all of you who are listening. Nashir and Pushpa and the people here at CAPS in Hong Kong, we could not do any of this without you. You are the ones on the ground. You are the ones in the front line, and you are the ones sharing your experience. You may know that there's been a lot of talk about the social sector, the nonprofits and social enterprises in India not getting enough respect, not getting the recognition that they are due. By filling out the survey attached to the Doing Good Index and lending your voice to ours in helping us to understand what's happening in the sector, you are engaging and helping to earn the respect that you desire and you deserve. So I encourage you to stay involved with us and listen and ask questions. And let me just tell you that if you have a question, please put it in the Q&A and we will respond to it during the Q&A section of this webinar. So having said that, let me go on and start the presentation. Okay, I think everyone should see that, yes? Okay. So, as I said, India is one of 17 economies where we carried out the Doing Good Index in 2022. We have done this index now, this is the third iteration, 2018, 2020, and 2022. And really, it's the only survey of its kind in the world, let alone in Asia. And we're very pleased that we get such robust participation. We're going to go through and share with you some of the findings from this study. So let me go to the next slide. In each of the iterations, we have the index, as we'll show you, is composed of 4 sets of indicators. 3 have to do with government, regulations, tax and fiscal policies, and procurement. 1 has to do with the society as a large, that's ecosystem. But we've decided that every 2 years, we need to switch it up a bit and understand something else. Now, when we created this survey, the questions at the end of 2020, the question obviously at that time was the impact of COVID. And we had no idea that throughout the entire data collection process, we would be grappling with COVID-19, but we were. And what did we know? That during the pandemic, people, social delivery organizations, and companies stepped up to provide healthcare, stepped up to provide PPE, stepped up to help families have access to food and medicine, and for kids to continue to learn. But we also know that COVID-19, it didn't create any new trends, but it accelerated existing trends. Some of those trends were positive, like the use of technology to do our work, and the real coming together at the very local level of different organizations to address our community challenges. But many of these trends are not so positive. So we know that disparities increased: economic disparities, social disparities, educational disparities, health disparities. So we know that we have to come up with better solutions. We need to work together more effectively, more collaboratively. But we also know that there's a widespread trust deficit, which actually harms the sector from living up to its full potential. In fact, when we created the Doing Good Index, addressing the trust deficit was one of the key reasons we crafted this study in the first place. How can we build trust? How can we increase transparency and accountability so that money can flow without the obstacle or the hurdles of the lack of trust that we experience now? This trust deficit is quite visible in India. And what's interesting about our study is that almost all organizations say and feel that they are respected in the communities in which they work. So where you're working, with the people you're working with, they respect you. But somehow that does not percolate up to the national level. So while individual organizations feel respected and trusted in their local communities, at the national level, the social sector still experiences a level of distrust. And that is very true in India. So we have some tools and suggestions and ideas on how to fix that. And we're going to go through it with this presentation. So what is the Doing Good Index? Oh, sorry, I skipped a slide. What is the Doing Good Index? As I said, it covers 17 economies. With your help and the help of our partners, we surveyed 2,239 SDOs. And for those of you who filled out this survey, you know it's a beast of a survey that usually takes about 45 minutes to fill out. But when we go through all this data and the understanding that we have, you'll see why it takes so long and how comprehensive it is. If we're going to do it, we should do it right and cover all the issues. In fact, as I said, we're going to cover COVID in this presentation. In the next iteration, we're going to have additional section on technology and how it's being used or not fully exploited to the degree it can be. We also, with the help of our partners, interviewed 126 experts. They corroborate the findings that we get from the SDOs themselves. So the input, the data that goes into this index comes from these two data sources, the 2,200 plus organizations, plus the 126 experts that we survey. And this next slide just runs you through very quickly our microsite attached to this survey, and I encourage you to go through it. There it is. Yeah, it's not moving. Oh, there we go. Okay.
Yeah.
You can access this microsite through our website, and as you can see, you can play with the data. In the very quick view we just gave you, we compared India 2020 to India 2022, but you could compare India to China or India to the Philippines or whoever else you want to. That way, you can play with the data and see what is meaningful for you, and we encourage you to do so. The Doing Good Index comes up with 4 clusters, and let me just say, in each of these clusters, the countries or economies are listed in alphabetical order. These are not in order inside their cluster. The reason why we do clusters is really why we want to say broadly what's happening in this space. Singapore and Taiwan are doing well. Why? Mostly because the government in those 2 places understands that the social sector is a key and fundamental partner for them to achieve their societal goals. And why is Bangladesh and Sri Lanka on the other end of the spectrum? Because mostly the government doesn't have that understanding at all. And the countries that are in the doing okay and doing better category are mixed. So we're going to go through and share India, and during the Q&A, we'll answer any other questions about these clusters if you like. But essentially, we do think that government regulations matter and that there's ways to empower the sector. Singapore and Taiwan do that, and we can show you how. At the end of this discussion, we also have a little video from our partner in Singapore talking about what the lessons are for our country that does particularly well in our index. So India is doing okay. It has been doing okay 2018, 2020, 2022. And as Nishir will explain later, and Pushpa too, there have been pretty significant changes in the regulatory and tax ecosystem in India, and you all bear the brunt of that. Still, overall, India kind of stays at this level, but it should be doing better. And so we want to get us there. And we think we understand what are some tools or levers to improve how India does on the Doing Good Index. One thing that's very clear in India is that the government is sending mixed signals. On the one hand, government is the one behind the CSR legislation, which has put a bunch of money into the social sector since its inception 6 years ago. It's also the government's behind building the social stock exchange with input from our partners, among others, to help make credible, legitimate, and get more funding to the social sector. The government is behind creating super funds like PM Cares. On the other hand, the government is also tightening FCRA measures, tax policies, regardless of whether you get money from foreign sources, that really make it seem like the government may not trust the sector as a whole. So these mixed messages play out and make your lives harder. And we call attention to the fact that everyone on this call is engaged in trying to make our communities and our world better, and we need to be supported in that pursuit. So having said that, the Doing Good Index can help us understand in India how to mitigate the trust deficit, how to have better regulations and policies, and to help us collaborate better. Our problems are very complex, and we know that no sector on its own can solve the problems we have today. So we need the government and the private sector and the social sector to work together, and we can give some tips as to how to increase that likelihood. Having said that, I'm going to pass the
Baton.
the baton. There's no microphone either. The embedded microphone over to my colleague Annelotte, who will take us through the specifics.
Thank you, Ruth, and thank you everyone for joining us this morning. So I'm going to talk you through a few of the findings specifically from the DGI. And before I go into those two areas that Ruth just spoke about, the regulatory framework as well as collaboration, I want to take a step back and just revisit the point about COVID, which was the thematic area of the DGI 2022. Now, everyone will agree that the past few years have been tough. It have been tough on individuals, on companies, but also for the social sector. And I'm sure most of you will agree on that. Governments were not able to deal with all of the social needs by themselves, and they really turned to the social sector to help, and they really stepped up. Ruth already spoke a bit about that, how they were at the front lines, really providing much needed on the ground services. And in India, 95% of our surveyed SDOs say that they were directly involved in COVID relief efforts, and that is the highest in Asia. So that is really amazing. And this was usually done above and beyond the regular work that they were still doing, and also seeing an increase in the demand of their regular services and products. Add to this the challenges of working from home, social restrictions, figuring out how to move online services. It really was a challenging time for SDOs to really adjust their operating model. And at the same time, there was also a pressure on funding sources. Funding decreased. 61% of SDOs reported that they saw a decrease in donors. Companies and individuals were redirecting funding to COVID relief efforts. So you can imagine these two things happening at the same time, demand of their services and products, yet at the same time, a decrease in their funds really put a lot of pressure on the social sector. But I do want to say it wasn't all negative, and I want to just highlight that there was also a lot of optimism that was shared amongst the SDOs, and 78% or 87% of SDOs say that they believe that the social sector was viewed more positively as a result of COVID. And we think that is very much due to the fact that they were seen on the ground to be doing work, and that really helped boost kind of the image of the sector. Now, just to go back to that point around regulations and these mixed signals, the Doing Good Index data really illustrates this. Regulations are really important for the social sector. They are allow the smooth operation of organizations. They facilitate their general operation, but they also help build really important accountability and trust. And Ruth always refers to regulations as cholesterol, and there's the good cholesterol and there's bad cholesterol, and we need more of the good cholesterol, good regulations to help this smooth operation of the sector. But too much regulation is a problem. It can, or not well thought out regulations, they can add undue pressure, administrative burden on SDOs. And so it's all about trying to find that balance. The good news is that in India, there have been some recent changes in the past few years to move some of the registration processes online, which has really helped make that process of registering an organization much easier. It has come down to about 130 days on average for an SDO to be registered. There's only 2 clearances that are required, which is quite easy compared to many other countries. And also, rules are generally enforced in India, or at least perceived to be enforced, which is important. It can really help build that accountability that can ultimately help build that trust, and that is lacking in the sector. So these are really good developments. But as Ruth also mentioned, there are some problems here, and it really is this kind of mixed messaging that we are seeing. Ruth already mentioned the increase of kind of stringent regulations when it comes to FCRA, the administrative burden associated with that, tax regulations, and I'll talk a little bit more about that, are difficult and also are an inhibitor to the sector. Add to that the regulations are really difficult to understand, and 75% of SDOs say this, but we can also attest to that. We look at all the regulations as part of compiling the information of the Doing Good Index, and they are difficult to understand. They keep changing and they are not easy to understand.
And as much as Nashir Dajrawala is our guru, he cannot do it all. So
no, he helps us when we don't understand things. So it is really an area where there can be improvement. The regulations are available online, but they are not easy to understand. Another area where there's some room for improvement is when it comes to kind of the transparency and accountability. And an important factor for that is annual reporting. And India could join the majority of Asian economies that makes that mandatory. Currently, it is optional. And we think that's a very easy step that can help contribute to that accountability and transparency. But SDOs don't have to sit back and wait for the government to mandate that, and they can take it in their own hands to make this available on their website and to share the work that they are doing. And one of the ways to find that balance between the good and the bad regulations is for governments to listen to what SDOs are saying on the ground and to understand what the problems are or what can be done better. Unfortunately, that is not happening a lot in India. Only 10% of SDOs say that they are regularly involved in policy consultations. So that is really something that we would like to see happen more of, and can really help ensure that regulations meet also the needs of the sector. Now, taxes. I know this is not a particularly exciting area, but tax and fiscal policy is extremely important when it comes to helping drive funding to the social sector, but also because tax and fiscal policy has an important signaling effect. In Asia, governments loom large. Individuals and companies tend to follow government signaling. They tend to look at government messaging. And so when the government is showing support of the sector, for example, through enabling tax incentives by encouraging donations to the sector, that sends a really strong message that people and individuals and companies should donate to the sector. This is why it's so important. And the tax and fiscal sub-index of our Doing Good Index most closely mirrors the performance on the overall index. And as you can see, that India is not doing great when it comes to fiscal policies, or tax incentives specifically. It is only one of very few economies that does not have 100% rate for tax deduction. What does that mean? It means that for every dollar that somebody in India donates, only 50 cents of that can be deducted from their taxable income.
Unless the funding goes to PM Cares.
Yes.
Then you get 100%.
Then you get 100%. But for regular donations. And add to that, and we often call this double disincentive, is that it's not only a 50% rate, but it is also limited to up to 10% of your taxable income or profit. And so what message does that send in trying to encourage charitable giving? We think it's really increasing that rate to 100% and removing that limit could be a really, really strong signal to help drive more money to the sector.
And if you look, you can see that even in a country like Vietnam, it's 100% tax subsidy for both individuals and corporations with no cap. So Vietnam also is an emerging economy doing very well in some ways, like India, and yet the government has been able to put these policies into place.
The other area which Ruth touched upon in an earlier slide is around increased collaborations with government, collaborations with companies. So let's take a look what the DGI tells us about collaborating with government. Now, Ruth also mentioned that the countries that tend to do well on the Doing Good Index are those where the government sees the social sector as a partner and collaborates closely with it. When it comes to direct funding, the findings are quite positive. 42% of SDOs in India receive direct funding through grants from the government, which is great. It makes up 15% by proportion of their income. There is some room to increase that, but it's definitely a positive direction for the government. However, there's a mixed opportunity when it comes to procurement. Procurement is when the government contracts the delivery of services to SDOs. And this is really a missed opportunity in India. Currently, only 17% of SDOs report that they receive income from government contracts. And this also only makes up only 1% of their, by proportion of their income, meaning it's almost insignificant. And why is procurement so important? Again, for the signaling reason, when people see governments procuring services from sectors, it sends a very strong message of support. But the SDOs themselves also can really benefit from it. It helps build their capacity, it helps them scale, and it provides a stable form of income. And so it's really a win-win. What could be done to help encourage this? In Asian economies, we see procured vendor lists where there are lists for SDOs that get preferred access to procurement opportunities, or we see in some economies subsidies or tax incentives for SDOs to respond to these procurement contracts. So those are just some ways in which other governments are encouraging procurement from SDOs. What about companies? Companies can also really support the social sector. One, through funding. The CSR law has obviously driven a lot of funding to the sector, and we see that in our data. 50% of SDOs receive funding from corporations, and this makes up 16% of their funding. This could be higher. There is room for improvement, but there is definitely engagement there. But beyond funding, they can also provide in-kind donations and lend technical expertise and assistance. SDOs often need lawyers, technical IT assistants, accounting, very much knowledge and expertise that they often can't afford themselves. So companies can, through volunteering or sitting on boards, really work with SDOs to provide that. Before I hand back over to Ruth, I want to just touch upon one challenge and one opportunity for India. One is talent. Now, it will come as no surprise to you, I think, that if we say that beyond funding, talent is the most cited challenge for SDOs in the sector. And this is not unique in India. We see this across the region. SDOs find it very difficult to recruit and retain staff. Why is this the case? Various reasons. There is often a perception that people working for SDOs should be paid less. High salaries and bonuses for the social sector are frowned upon. There is also a lack of capacity building for SDOs, and that together means that it's not an attractive workplace for people. And there's really a need for donors to understand that there needs to be funding for operational funding, for capacity building, so that organizations can really make that investment to help build the capacity internally and to be able to deliver the best services and products that they can.
And that became very apparent during COVID.
Yes.
So as we mentioned, we are going to devote a whole section on technology in the next iteration of the Doing Good Index, but we did get some of the answers regarding COVID. So during the pandemic, 62% of the respondents said that they increased their online services. India is a wired country. Everybody has a phone. Everybody is on the internet. That can be a blessing and that can be a curse, but for our purposes, let's take the blessings where we can. 82% of the organizations saw an increase in the daily use of technology in their daily operations. And we see that 38% say they crowdfund now, and that 90%, which is the highest of all the places we asked, intend to crowdfund in the future. Now, in order to use all this technology, they need to build capacity. And so we encourage donors and governments to understand that you need administrative and operational support to be able to do that. When you invest in your team, it's often not covered by project-related expenses, but it's integral to the efficient and smooth operations of these organizations. So we support that.
I just said, but I think that brings us.
But that brings us to the end of this presentation. So this QR code takes you to the DGI 2022 website. That is also where you can find the microsite. So we encourage you to interact with our materials. But before you do that, let's interact with the other panelists that are on this as part of this webinar. And I'm going to ask Pushpa Singh, Nashir Dajrawala, and Poonam Chowsky to join us now so that they can share their views on this moment in time where we all are regarding the social sector in India. And once again, while they're coming on, please do put your questions in the Q&A and we can address them. So I think Nashir is going first. Okay, Nashir.
Thank you, Ruth and Annelotte. That's a lot of data and information for, more importantly, the government of India to digest, assimilate, and do something about it. So while we are speaking largely to the non-governmental organizations right now, I also hope that the message reaches the policymakers in terms of how India can move from it's doing okay right now, can it be doing better, or maybe at some point in time also doing well. My thinking in this regard, and I completely agree with what has been said since 10:30 in the morning, that the key to doing good in this country is enabling legislation. And much as you have rightly pointed out, I have been 35 years in the sector. If you had done this survey 35 years ago, we certainly would have been in doing better category back then. And I say this with a lot of emphasis. I have seen consistently the laws getting tougher and tougher. And this is not to blame any government regime as such. I have seen the tightening of laws literally since the year 2005, 2006. So we cannot say, oh, it's this government that is prosecuting the NGO sector or nothing of that sort. I think there has been mistrust and a high degree of mistrust with regard to SDOs, as we like to call it. First of all, the entire narrative about the NGO sector is a little false. Way back in 2009, there was information given, and of course, this is also given before the Supreme Court in an affidavit, that there are 3.3 million NGOs in this country, literally one for every 400 Indians. Recent statistics that we have at hand give us a completely different figure. It's not that large a sector. As we know, most organizations in the last 2 or 3 years had to go through a revalidation of their tax exemption and tax deduction certificates. And what emerged? What emerged is that just about 250,000 organizations are tax exempt under 12AB and even lesser under ATG. As far as FCRA is concerned, at one point of time, there were 40,000 registered, but a lot of them got deregistered. Some of them rightly got deregistered because they were no longer active or not filing their returns. We have just about roughly around 20,000 organizations receiving foreign contributions. If one cares to look at Niti Aayog's NGO Darpan site, which I looked at just yesterday, there are just 166,000 NGOs that are listed over there. Now, these are organizations who are listed who want to or are receiving government funds or foreign contributions. So if you look at all these figures, where do we see 3.3 million? I think the statistics that we had before us are flawed. But coming back now to the challenge, what is the challenge? While COVID was a difficult year, a challenging year for all of us from a health point of view, I think instead of relaxing the laws instead of making the laws more friendly, 3 laws were changed back to back in year 2020 itself. It started with FCRA, the FCRA Amendment Act and the rules, which happened in September 2020. The income tax, for the first time in 2020, it was proposed that NGOs will have to go through a revalidation process. Prior to that, as you know, if you had applied for 12A and ADG, you can continue on that, and the 12A and ADG depended upon your compliance factor. If you were compliant, you continue to remain tax exempt and tax deductible. Now, under the new regime, you are revalidated only for a period of 5 years. Now, thankfully, in the year 2021-22, most of us got revalidation on a straight-through process, which was if you submitted the documents and you applied for it showing your intent to be revalidated, you got it. 5 years later, it is going to be a much more tougher process. Is the government of India going to make this a very slow process, as we are seeing it right now with FCRA? People's FCRA expired more than 1.5 years ago. Many of them, thousands of them, are still awaiting the renewal because of the time factor. The government is ill-equipped to look at every organization very carefully. And that's what FCRA is doing right now. So it's going to be a challenge. And of course, the CSR law changed. So let's see what changed under FCRA, which made things so disenabling, if I may use that term. First of all, the designated FCRA account had to be and continues to remain that way, has to be with the State Bank of India, New Delhi main branch. Now, remember, this was COVID period. Of course, the government of India said you can work through your State Bank of India, local branches who will help you. It worked in the city centers. It did not work at the district level. Many failed to, they were unable to file their returns on time because the SBI account was not established by them. And more importantly, funding suffered. What else happened? Earlier on, prior to the amendment in FCRA, NGOs were allowed to spend up to 50% of the foreign contributions received for administrative expenses. This was further reduced to 20%. Now, this became very, very restrictive. What's worse, sub-granting was made a violation under FCRA. So if you receive foreign contributions, you could not give it to any other organization also carrying out charitable activities. In other words, intermediaries received a fatal blow. Intermediaries that were receiving foreign contribution. Now, a lot of donors overseas felt more confident giving to these intermediaries because they trusted the intermediaries that they will work with NGOs who they will check on their monitoring and evaluation. They will check on their various factors, various metrics. So they literally, intermediaries suffered a big blow. Of course, we happen to be a resilient people and very innovative country. So we found other methods to work around it, legal methods, mind you. So intermediaries took on the role of monitoring and evaluation and asked the foreign donors to give directly to the NGO sector, etc. Now, another serious factor. If you as an organization lose your FCRA, maybe for lack of compliance or whatever, any FCRA assets that you have would vest in the competent authority, which means the Ministry of Home Affairs. Now, so far, so good, because let's say you're not being compliant, but remember, the donor has put in a lot of money. Maybe the donor gave you money to buy land, to make buildings, to make schools, make hospitals, schools, colleges. These are FCRA assets, which are immovable assets. They can also be assets which you have in your bank, etc. What's worse, under the amendment of September 2020, even if you voluntarily surrender your FCRA assets will vest in the competent authority, which is the Ministry of Home Affairs. I think this is punishing. Why would any foreign donor want to let you create FCRA assets if this is going to be the fate of your assets, even on a voluntary surrender of FCRA? So this, I believe, is crippling and it's most, if I may use the term, draconian in nature. Under income tax, what have been the changes? It has been largely around corpus right now, and that's the talk right now. That earlier on, if you, and this is what we learned during COVID, that organizations who survived the financial crunch during COVID had a corpus in which they could dig into, and that's how they survived. Corpus is like your capital, it's like your reserve. Now the law has been amended. It was first amended in 2021 that if you dig into your corpus, then it will be counted as application of income to a charitable purpose only in the year in which you refurbish this. That is, you put it back into the corpus. The most recent amendment of 2023 says this must be done within a period of 5 years. Otherwise, that money which you used up will not be treated as application of income towards charitable purpose. This, again, I feel is a big major blow to organizations who depended on their sustainability on corpus. So, I mean, why would again donors want to give towards corpus to help build? Just when a change was happening, a cultural change where donors felt, let's give to corpus so that it helps build sustainability of the organization, the law has been amended to make it difficult. What's the worst thing that has happened this year? Inter-charity donations. Just as under FCRA you cannot subgrant, now this is a very indirect way in which you cannot subgrant. If you happen to be an organization which gives to another charitable organization for charitable purpose, only 85% of what you give will be counted as application of income towards charitable purpose and not more than that. Now, this is going to be a major, major blow to grant-making foundations. The recipient organizations need not worry so much, but corporate foundations, foundations whose only job is to support other organizations, this is going to be a crippling blow. In fact, just today, I'm going to be having meetings with a number of foundations, and we are thinking about strategies. What will ultimately happen? And I can see a trend. Corporate foundations will start becoming implementing organizations, which means a death blow to the grassroots level organization. This, I think, now, how can you talk of doing better or doing well if this is going to be the position? Finally, I will touch upon CSR. CSR, corporate social responsibility, has increasingly become comply strictly by the rules. The CSR stands by comply strictly. And the rules have been made so difficult that unless the 2% is spent, NGOs are told you must return the unspent money. If it is an ongoing, we'll put it in an escrow account and then return it to you. It's just become more and more difficult. But just a couple of, and I'll take 30 seconds for this. The good news, because I always like to wind off on the good news, is there have been a couple of judgments of the Supreme Court. The Supreme Court's judgment of October 19th last year, which talked about business income of charity organizations, which clearly the sum and essence of the verdict is that if there is any business income that a charitable organization has, first income tax department should test, is it for a profit motive or just regular income generation that is happening? And more importantly, the Supreme Court has said that if the charges that are, if there are fees that are charged is at par, at cost, or notionally above cost, it should not even be treated as business income. So I believe that's a landmark, happy judgment of the Supreme Court, which is helpful towards an enabling judgment. And finally, the social stock exchange, which is promising for fundraising, but I will let my colleague Pushpa Aman Singh talk about that. So sorry to have been the harbinger of not so happy news. Just said what I had to. Thank you. Yes, Ruth, I'm done.
Oh, sorry. I was entranced.
Oh my gosh.
by your happy ending. Okay. Next, Pushpa is going to share her thoughts. And Pushpa, we do have questions about the social stock exchange, which I'm sure you're going to touch upon in your comments. Okay, go ahead, Pushpa.
Yeah, thanks, Noshir. I think my system got a terrible shock with Noshir's comments on how the grim scenario is in the country. And I've been seeing some of the comments in the Q&A box. And I'm going to take on the challenge of actually presenting the more I'm going to take on the challenge of presenting the positive side of how things have changed in the last couple of years, or emerging economy, emerging responses from the government, from the philanthropists, from enablers in the sector, that is kind of making organizations more resilient and stronger to take advantage of the opportunities around us. I saw a question from Arvindan in the chat about, has the social stock exchange gone silent? No, by no means. The social stock exchange, as one of the platforms for giving and for bringing resources to the sector, was announced a little over a couple of years ago. And there's been a lot of background work that's been going on to make the existing stock exchanges, the BSE and the NSE, get ready with the platform to launch the social stock exchange. There was a technical group and a working group that put together the framework. There were notifications from the government last year, and a lot of engagement that happened in the, since January this year, on the donor side and the nonprofit side, to take in suggestions on, how it's going to work for them and for them to be able to respond to this opportunity. I see the social stock exchange over the next 5 years to emerge actually as a mechanism to mainstream a lot of the efforts that was and is being done by different players in the philanthropy marketplace. By marketplace, I mean where donors and nonprofits get to engage and improve giving. So Give India, where I worked in the early 2000s when it was launched, was in a sense the first charity exchange of the country. And now the various crowdfunding platforms are some form of charity exchange, but the stock exchange will actually mainstream a lot of these efforts in terms of how due diligence is done, how organizations qualify, what kind of regular reporting will happen, what kind of impact assessment would happen. And it's nice that it's not kind of rushing to get launched and to mainstream things, because there are lots of adjustments that would need to be done from the exchange. Pooja, if you can still be on the previous slide. A lot of adjustments would be required from the sector, from the exchanges, and from some of the enablers and the donors to make this work. And I think that the social stock exchange could be a place that will address the trust gap that Ruth was talking about. And somewhere, I think the regulatory changes that Noshir highlighted come from this deep mistrust that is there between the various players. So I think this would be a good place for people to participate. And in our estimation, about 90 to 20,000 organizations could actually qualify and participate for this. But because of the lack of data, we really don't know who are these 19, 20,000 organizations. We kind of have identified about 1,000 nonprofits who actively the exchanges are reaching out, and we're also reaching out to. But I must also put in perspective that out of public limited companies, only about 10% are listed on exchanges. So this is not the answer for everyone, but we believe like out of the 2.5 to 250,000 tax exempt organizations, perhaps about 10% could come onto the exchanges in the course of the next 5 to 10 years. The next one, Pooja. So some of the responses from the sector has been like, some of you would have participated in the conversation around pay what it takes that the Bridgespan group has been talking about. They've already engaged about 6 funders, 10 intermediaries, and over 1,000 nonprofit organizations. And they are calling to attention the fact that it takes several direct and indirect costs for a program, and how can some of the private funders at least start looking at supporting foundational and organizational capabilities and resilience, and how to enable organizations to increase impact. And I've just kind of said okay to being part of a group that is going to build handbooks and tools for nonprofits to understand what are their real costs, so that you start building these costs into your project asks, into your program design, so that when you're asking for costs, you are taking care of you putting the right number out there. To the next slide, please, Pooja. I know that Gagan and others from Dasra are possibly there on this call. Some of you would have attended the Dasra Philanthropy Week online as well as in person. The Rebuild India Fund, I think, is an interesting example to talk about, which is really targeted at organizations working at the grassroots, started as a COVID response, but has now become a long-term program, which we're going to see expand and grow in the next 5 years. They do have a method of discovering partners, nonprofit partners who will qualify for it. So in my later slide, I'm going to be saying that be discoverable by Dasra for this program. But this is really looking at smaller organizations with less than 2.5 crore annual budgets, working really on the ground, where it's difficult to reach the communities. And there's a lot of capacity building that goes along with the funding in something like this. The next one, Pooja. So while I talked about, 3 initiatives that kind of is bringing more funding and more support into the sector so that it can help us do more good, I'm also going to now talk about some of the initiatives from within the sector that helps you do better. And these are, exactly addressing aspects that the Doing Good Index brought out, capacity building. So the Grow Fund that about 100 NGOs are already participating in, get a lot of organizational development support. You would have heard about Atma's Common Minimum Program, and they were aggressively reaching out to nonprofits to join their next cohort, which is typically helping with fundraising, program design, M&E and all of that for organizations with a less than 1 crore budget. The Rebuild India Fund I already talked about is looking at organizations of a smaller size. And you will hear from Poonam, who is here today on this call, whose organization has a vertical, and she heads that focused on building organizational capability, the core capability, and working on not just funding, but also disseminating a lot of learning and supporting studies, of various kinds on various aspects of the sector so that we learn, and she'll talk a bit more about that. There are also initiatives, Pooja, the next slide, please, where you are getting now assistance for technology and for engaging volunteers. The Tech for Dev project, which again, led by Donald Lobo and others at the Chintu Gudia Foundation, now has many organizations working on the tech for development space, coming together. And NGOs are already taking advantage of fractional CXOs. So we're all not very big enough, 62% of organizations in our sector are less than 1 crore annual budget. So not all of these organizations, or most of them, cannot afford a full-time chief technology officer, but how do they get the benefit of having a fraction of a CXO? How can organizations take advantage of some of these shared resources? If you go to Project Tech for Dev, you will know how you can participate. Later, after my presentation in today's program, Pooja will also share links to all of these resources for you. Tech for Good Labs, with whom we are in conversation again, have a forum for NPOs. Please join that forum and ask your technology questions and find answers. There are a whole bunch of open source solutions that they have put together, and they also have volunteers, interns, and people who can support you, sometimes paid, sometimes pro bono, to adopt these open source technologies. And we, for one, are participating in that. On volunteering, we do have a bunch of intermediaries in the sector for the last decade, but India Welfare Trust, is actually helping, again, mainstreaming some of this. They, from time to time, they announce programs for how to engage corporate volunteers. I think their last announcement through social media channels was about, engaging corporate volunteers can also fund not just engaging those volunteers, but also bring some additional funding for you. You can raise as much as, maybe about between 1 lakh to 10 lakhs through that. They're also talking about engaging volunteers for specific programs, even if you're a small organization. There's a survey that is on, please participate in it. I also want to say that there is emerging support for fractional CFOs. So we are smaller organizations, cannot have a chief financial officer, but there are intermediaries who are providing those services. There are intermediaries who are now providing, again, shared services for accounting. And on compliance and reporting, we've started doing workshops for the Rebuild India partners and the GuideStar India partners. And from time to time, these are open to everyone, where we are kind of saying that while all these regulations seem like, we are being pushed to a corner and you have to be doing those things. In the last 2 decades that I have been in the sector, I've seen several organizations voluntarily embracing transparency and public accountability practices that not only make you a qualifier for many of these programs I talked about, but you begin to differentiate your organization by saying that I'm already way ahead. I have imbibed good practices of reporting and internal management for my, tracking my programs right from getting resources to results. I'll take you to the future slides, the next 2 slides on this, that you can actually serve and report better to the community and all the stakeholders that you can see in this circle by embracing these practices and being ahead of government bringing in regulation. And if we do some of these things, actually, I think somewhere we will be able to drive the narrative change. The next slide, please. Pooja, you can just fast forward perhaps. So I think one of the things that many of you can do is grow in your journey to do more and to get better. So first of all, your organizations need to be discovered, because some of the private initiatives I talked about, they all want to scale up their programs and they're looking for nonprofit partners. Many of them want to focus on the smaller and medium-sized nonprofits. So get on to GuideStar. We have only 11,700 NGOs out of the 252,000 who could be part of, taking advantage of these initiatives. Improve your trust indicators. So you may be doing a lot of things internally in your organization, but people who want to support you need to know that you are one of those 252,000 organizations, or you are one of those shrinking 16,500 NGOs with FCRA. People still don't know where to find those NGOs. Start putting your annual reports, like you saw in the Doing Good Index, that it's an optional thing, and among many economies. I have a statistic for you from the recent NPO survey that we did, that 77% of Indian NGOs put up their audited accounts in public domain voluntarily. But people don't know who are those 77% organizations. So be on aggregated platforms like ours to say that, here is a link to my audited accounts, or here are my accounts. More than 80% nonprofits say that they put up their governance information on their websites, but people don't know who are these organizations. And then I would say, if you want to scale up and get some of the private funding and subsequently even the government funding, you really need to, embrace certain practices, undergo certification voluntarily. Move forward. I just have 2 more slides, Ruth and Annelotte. So again, our study, the Doing Good Index talked about funding sources, etc. In a recent study, we actually said, what are the funding sources based on nonprofit sizes? And we find that when CSR opened up, as would be expected, organizations who are 1 crore plus, which is a small percentage, about 38% organizations, and only 17% are larger than 5 crore. These are the organizations who are garnering the CSR funds. And if you look at government funding, and let me say about retail, hopefully Poonam will talk a little bit more about that. Even among large NGOs, only a small percentage, 1/5, really have retail funds as a significant source of income. So we find that we're still not tapping a lot of funding sources that's available to us. Move forward. So I would say that organizations actually can work right from their inputs to impact. Start documenting, use this for your internal learning purposes, and also start sharing some of these things in public domain. Most of this, we found that 500 plus organizations who've been certified by GuideStar India have not had any problem in sharing a lot of information in public domain. If we start talking about what is going on internally, how we organize ourselves, I think there will be improvement in the trust indicators. We'll get better discovered. and we will begin to attract more resources, and somewhere over time, move to the next 2 slides, Pooja. So, soon you will be
I
hearing
thought you said there were only 2 more slides, 2 slides ago.
I'll just stop here. The social assessment cycle and all of that, a lot of training and conversation around this is going to come to you soon. Pooja, if you can just show the next 2 slides and we just close.
It's okay.
The last 2 is about saying participate in the Doing Good Index, participate in the studies that, about the sector that keep coming, because individually we cannot change the perception of government and other stakeholders. We need to participate in studies like this in large numbers so that, the stories about the sector emerge through data, which we can take, to the media, to government, and get the policy change moving. It's going to be a slow process, but the more of us who come and participate, our studies will have much more sharper results and results that we can speak to with more confidence. I think it's all that.
Thank
I'm
you.
done. Thank you.
Thank you, Pushpa. And I just, I think it's incredible the resources that are available to organizations that are part of the GuideStar universe. So if any of those who are on this call are not yet affiliated with GuideStar, please consider doing so, because obviously there's a lot of resources and expertise that they can bring to bear in helping you do many things better. And many of the questions are aligned with questions along, how can we improve? How can we have a voice? And they can help with that. But we will get to the Q&A. First, though, Poonam, will you share your thoughts?
Okay. Hi, good morning, everybody. Thank you, CAPS team, for organizing this, webinar to share the purpose of, DGI and how, different stakeholders can leverage this data available to all of us. Thanks, Noshir, for putting such, clarity and, understanding of what has changed and what are the challenges, for this sector with some level of optimism that we really all need to move forward. Thanks, Pushpa, for bringing about such, so many great opportunities that are available for the NPOs to really build their compliance muscle, build their, capacities. And I'm happy and proud to say that, at the foundation, we really work with quite a few of these, opportunities or programs for capacity building, of the organization and sector. So here today, my conversation will really focus on what is the role of data and how it is used for decision making. Pushpa really ended well that we collectively as a sector really need to build a voice, which can influence multiple stakeholders, and it has to be done collectively. While individually we do to the best of our ability to convince and influence our donor community, our stakeholder community, I think collective voice will be much more powerful, stronger to, make some transformational changes in the way we function and the way we see the sector growing and transforming. So I thought it will be interesting to say some of the 2 examples recently that we believe how data has helped us personally at the foundation, and how we've actually used this public good to make some critical recommendations to the government. Everybody is talking while it's not really gone silent, like Pushpa said, on social stock exchange. I think there's a lot of talk and confusion, questions, concerns, optimism. So I think we have a mixed bag of emotion when it comes to social stock exchange. And I think we all know that there are a lot of regulatory processes that are put in place, that will become a barrier to entry. But I think the intention is to really bring a lot of transparency and credibility, of the sector, in the forefront. And if you hear, SEBI chairman speak, in all the forums, the intent is to bring, how do we build the trust for the sector? And they are trying to figure out ways to build that, in the best possible way. But I understand that we need to hear the voices from the sector as well to be able to create a good balance of transparency, trust, while also ease of doing good. So, we are part of the SSEAC Advisory Council, which kind of is helping the council to understand what are the needs and challenges of the sector. And just giving an example that if everybody knows or have come across, what are the guidelines for a donor, a retail donor to sign up for SSE is minimum ticket size is 2 lakh rupees, and I count this as a retail donation, right? Because I mean, although we say retail donation ticket size are 500 to 1,000, but these are, let's say, and this is a 2 lakhs cap, right? So the big question is, who is this donor? What is the income of this donor has to be able to contribute 2 lakh to the, SSE. So we really did a lot of digging of data and, looked up reports that was published by Satwa Everyday Giving. We looked up report by Bain, and company on India philanthropy. We also looked at income tax data on how many actually, individuals have an income greater than 1 crore and above, because I think those are the people who will be able to pay that kind of money. Because, the data suggests that 2% of the annual income of individuals, generally is what they contribute, to doing good or to, charitable organizations. And actually out of that 2%, what the study says is, 90% of it goes to the religious institutions. We are very aware that, or to family or friends or immediate needs that are, coming to the individuals. And so if you see a very, very less percentage, 10% of the 2%, annual income of individuals is coming to the sector, formal sector. Now, out of that, how do we ensure that social stock exchange, is also a platform where giving happens? So if you see, the pie is very small, and, individuals who have an income greater than 1 crore, when I did the data study, are only 1.36 lakhs in the country. So a big recommendation that we made to SSE was that, can you, reduce the ticket size of the donation so that, more and more individual donors, can come forward and contribute and use this platform to make that contribution. While, it's still under review and the council will, meet and discuss and deliberate. What is happening is we are using, data that is out in the public domain to make a narrative stronger of why this is very important. Someone did talk about, tax regulation and exemptions, right? Social stock exchange currently is not able to offer or not currently offering any tax exemptions. And what, Doing Good Index is telling us in the slide that Ruth presented that, India is one of the, 4 economies in the Asian countries that, is less than 100% exemption. So again, we have put up this slide, as a recommendation that if we have to become at par with our Asian counterparts, or if we have to become at par with developed economies, how do we really raise the bar, to encourage for retail donors to, for doing good and doing better. So what is the point I'm trying to make is that it's very important for us to have this data in public domain, and hence the voices that you bring to the table in terms of your challenges, in terms of your barriers to entry, helps us to make a point collectively, to the regulatory or to, other philanthropists. Another important, study that I think even in the Doing Good Index, if we saw one of the slides, did mention that 55% of, NPOs reported, SDOs in this case, service delivery organizations reported challenges of talent, right? Both hiring and retaining. Now, I think 2 critical reasons that we all know, and then point towards is, one is, what the CAPS team shared is the pay parity. We are not able to really match at par with our, corporate counterpart and say, and there's a perception that we are, meant to be paying low because we are doing good, but we shouldn't be penalizing because we are doing good. And how do we, so there was a lot of, we knew it, we strongly knew that we are paid less, but we didn't have the data. So what we really did is invested in a study that was, conducted by CSIP. I don't know if everybody's read the report. If not, I would encourage everybody to look at that report on, compensation benchmarking study that was launched by CSIP in partnership with ISDM last year, I think. And that really talks about, what are the pay, benchmarking at different levels, right? From entry-level staff to your senior management leadership positions. And they have compared with, NPOs. They have compared, what are the salary benchmarking with CSR foundations, like corporate foundations, because of course, there's pay parity even between them. We all know, and then with the industry standards. So I think there's a very good data point now to say, how do we now, bridge this at least within the sector, right? I mean, and then move to say, how do we, start putting a proposal and voice to the donor and say, how do we make it equal, or at least, move towards that, bridging that gap. So I think, so for us, this data was very important, so trying to address one data gap was through the study. And the second thing that we want to do this year is, how do we understand the challenges of capacity of talent at different levels? Because we all keep hearing that, our staff needs skilling, training, capacity building, but, different people, different, levels require different kind of capacity building. For example, the first-time managers, who are promoted to middle management, require very different kind of inputs versus a senior management, recruit. So how do we really first understand what are the needs, challenges at different levels, and then kind of, look at this data to invest in design programs that can address that gap. So this year we're going to commission a research, and again, we'll reach out to, you to be able to contribute to that. And hence, develop and programs that will, then influence and impact all of you and the talent that we are currently working with in the sector. So yeah, I think this is what I want to conclude, that, data is, my big, I think it happens to all of us that, we don't see how my filling a 45-minute survey leads to a large policy level change. And I think here I'm trying to make a point that everything that you have filled in the past and continue to do so and will do so in any shape, form, in any survey conducted, whether by CAPS, GuideStar, will really help a philanthropic organization like us, who's very data driven, to use it and make better narrative, to promote to different stakeholders. So would encourage everybody to really, put your best foot forward in sharing, your challenges, learnings, so that we can become much more, and move towards the index of doing better. So thank you so much.
Thank you so much, Poonam. Okay, we'll have time for a little bit of Q&A, and we have questions for our panelists. But before we do that, we have a very short few-minute video on the view from Singapore, which we hope you'll find inspirational.
Hi, all the friends in India. My name is Peter Yang. I'm the founder and CEO of Impact, a capacity builder in Singapore for the social sector. Impact is very grateful to be able to partner with CAPS on the Doing Good Index in the Singapore setting. CAPS has asked me to share why Singapore is doing well on the Doing Good Index. Personally, my reflection is that Singapore government is the #1 factor why Singapore is doing well. Singapore government has spent a lot of money and effort to build an ecosystem in the social sector and try to partner with social service agencies that we call, or charities, right, to increase their capability to have more resources so that they can deliver better service. Here are some of the examples, right? #1, tax benefits. In Singapore, there are tax benefits for donation to charity, but unlike other countries, which you can claim 100% tax deductions, in Singapore that rate is 250%, which means every dollar you donate to charity, $2.5 equivalent tax deduction can be claimed against your taxable income, right? That's a huge incentive for people not only wanting to do good, but also having taxable benefits for themselves. #2, there are various campaigns targeting different segments of the society to give back, right? To give back your time, give money, and even give your resources. One of such campaign is Giving Week, which is in December. There is a week encouraging people, whether you are students, whether you are elderly, whether you are working people, to give back. Third, matching donations. Government understands certain causes are a bit hard to get donations. For example, arts and heritage. government set up a matching fund, which means that every donation the donor gives to the charity, government will match $1 to help motivate the donors and also increase the funding to these organizations. Another example, the fourth example I can give is about capacity building. Right, government believe that for charity to thrive is not only about their program, but it's also about their capacities. Right, capacity in terms of managing finance, doing fundraising, managing HR, having technology to transform the way how they deliver the service. So government has pledged a huge amount of money paying consultants to come in and help charity to transform, to develop innovative solutions and using technologies, right? And even there are encouragement for skill-based volunteers to come in, for all the professionals to come and give back not only their time, but their professional skills, and even giving time can claim tax benefits in Singapore, right? So here are some of the examples, and there are plenty other mechanisms, and I'd be very happy to share if any of you are interested. Yeah, you can contact CAPS to find my contact details. Thank you so much.
Well, I will thank Peter on our behalf, and may I ask Pushpa and Poonam and Nashir to come back so we can just take a few questions. We got a number of questions. First, everyone should know that we will send a follow-up email to all the participants of this, which will include all the links as well as the presentations that were shared with you, the Doing Good Index, as well as Pushpa's presentation, and the links that were cited. Second, another resource is Nashir writes a very regular kind of a, what do you call it, Nashir? WhatsApp
blog. It's a blog, and I send it out on WhatsApp to a number of people.
Yes, and it is essential reading to try to understand the maze of regulatory pathways in India. He explains things, he comments, and every once in a while his kind of his inner roomie comes forward, and he waxes poetically about anyone who can write poems about the regulatory system in India is worth following on through WhatsApp. But so I encourage you to follow. And what's the address there, Nashir?
I'll share that with you.
Okay, we'll put it in that follow-up. So
yes,
that is a way, because people have very specific questions about the tax regime, about these different changes, and Nashir addresses a lot of that. And if you have particular questions, I think it's fair to say that if you write them back to Nashir, he may understand that other people have those questions and address those in the blog post as well, right? Okay. Second, I would say that there's also a lot of questions about the social stock exchange, Pushpa, and Nashir has been involved with that too. I seem to recall that I saw some kind of, and Poonam's involved with it, there was some kind of fact sheet about the social stock exchange. I would like to include that in this email that we're sending out, the social stock exchange fact sheet, because many of these questions are of interest, including how to register. There is one participant who said that it's very difficult to register, but I know a number of the questions will be answered in that fact sheet. So the third, I would say, batch of questions I would throw over to the three of you, and that is about political voice. Now, I agree, Poonam, by filling out our surveys, it's really helpful. And I can tell you that I was in Delhi 2 weeks ago, trying to meet with government officials, some successfully, and with other intermediary organizations to tell the story of what the Doing Good Index does. So when you fill out these surveys, they just don't go onto a shelf. GuideStar uses them, ATE, Chandra uses them, we use them to go tell the story and speak on your behalf. But does anyone else have thoughts about political participation and voice that they'd like to share? No? We're frozen. Are we frozen?
Nobody's responding.
Pushpa, I thought you might want to talk about the nonprofits at 75, that effort to
Surely.
yeah.
So in my 2 decades in the sector, and especially the last decade or so, I find that while the DGI showed that how much nonprofits are engaged or NGOs are consulted for regulatory changes, that's kind of gone down. Possibly it's also because of the pandemic period or other reasons that most people guess. I often find that as a sector, we react and respond almost when things have happened, or we believe that, just before budget or something is when we need to be there. But in my view, it's a continuous effort. And each of us, if we collectively look at even the tax exempt organizations, everyone gets to file their return, everyone gets to engage at some point in time or the other with the regulator, with the auditor, with various people. It's important to not just speak for our organization, but we need to speak for the sector and we need to educate these people. In some of our workshops, we in fact say that use the right terminologies, because we can't assume that regulators and other stakeholders understand the same language that we use. I'm not talking here about, whether it's English, Hindi, Marathi, but the way we describe our work. And during my time at Give India and even at GuideStar, I find that there's a huge gap in the language. So even your accounting, the way you mention your expenses or the way you represent in your accounting statements, which gets looked at by the regulators, you need to be telling your story in such a way. And I think Pay What It Takes, some of the handbooks that will come there will kind of address this issue. But yes, about the nonprofit, the NGO at 75, we all felt that when India is celebrating Amrit Mahotsav, India at 75, the nonprofit story that got some attention during COVID was so quickly missed. And that's because when regulators and others, and I got to meet some parliamentarians when our report was launched at the Jaipur Literature Festival, which is supposed to be the biggest literary event on the planet. And we met a wide range of stakeholders there, and they said when we Google, we don't get enough data about the sector, right? And therefore we need to have some of these studies and easy to reach. There was a small class project that was done by students at the Ashoka University, and some very interesting facts have come out that students in humanities know more about the nonprofit sector, and students doing STEM and other background don't know enough. And so those who do humanities are a very small percentage, and most of them invariably would start working in the sector or in stakeholders, maybe in CSR and other departments of corporations. And therefore, it brings me back to the fact that systematically, like DGI happens every 2 years, maybe the nonprofit survey that we're doing, we need to be doing it every 2 years. And many of us need to start quoting, even if you're an NGO, you don't have to think that I'm an implementing NGO, I'm an SDO, I'm not an intermediary. How do I kind of speak for the sector? Please start using the data. And we are going to work on doing workshops where each of us can draw inferences, start using this in our project reports, in every time we tell our story, in our annual reports. This is what our sector looks like, and this is how I'm kind of contributing to do that. So I think in every conversation, whether with a prospective employee, the talent part that we talked about, not just people who we've hired, to every prospective donor, every conversation that we in the sector, and all of us talk a lot, and we talk pretty eloquently. Can we use data in those conversations is the large thing I want to say. So each of the 100 people right now on this, please use data along with the powerful stories that you tell.
Great. Thank you so much, Pushpa. And lastly, I don't know the answer to this, but there are a number of people who express frustrations with the CSR legislation, particularly with the fact that we all know that companies tend to give where they are operating and not elsewhere. And we all know that that's, the kind of the underbelly of the CSR legislation. I don't know the answer to this, but perhaps Poonam or Nashir does. Is there a way to provide input or feedback about CSR as it continues to evolve? I know that new regulations are coming out. So what is the way to engage with that kind of refinement and retooling process for CSR?
I think the answer is that I think companies are unnecessarily complicating this matter. It's very much in the subsection of section 135 that preference shall be given to local area where you have your business. So it's a recommendation, it's preference. It doesn't say you're mandated to do CSR only in your local area. So I think the spirit of the law is do not ignore the local area at the cost of doing elsewhere. So do something in your local area, but it doesn't prohibit you from doing in other aspirational areas as well. So I am very clear in my mind, and I do get this query often from companies. And for example, there was an airline that I was speaking to, and they said, but our headquarters are only in Mumbai. And I said, no, everywhere where your plane lands is your local area. So that's the way to look at the law.
Okay, great. All right. Well, I think we've answered most of the questions. I would say most people hope springs eternal. There was one question where the guy, whoever it was, said basically he surrenders or she surrenders, but she's still on the join the webinar, so maybe not completely. So I think that the positivism, the optimism, the energy is apparent, that everyone wants to improve is apparent. We one last plea to fill out the survey that the Doing Good Index survey will certainly be helpful, and we would be very happy. We will continue to share the findings from this index with you and really with anyone who will listen, and which is a big commitment because it's a big country. There's a lot of ears. But we are committed to the dissemination of these findings and to show what best practices are. That's why it was useful to hear from Peter Yang in Singapore, where it's clear that the government, the private sector, and the social sector see that collaboration as, you know, mutually beneficial and are working toward that end. So with that, we'll send you all the links. I really want to thank our partners, Pushpa with GuideStar and Nashir with CAP, and thank you, Poonam, for taking your time to share your views with us. Thank you, everyone who's been on this call, and we very much look forward to continued engagement. So that's it from us.
Yes, thank you.
No group picture?
Yes, we can do a group picture, but well, I don't think participants can.
No, this is a webinar, not a so we can't share everyone. There would be a lot of faces. Okay, but thank you very much. We do have the list of who attended, and we're very grateful that you've spent some time with us. So thank you. Bye-bye.